All right, my name is Benny Raberson. I'm with Movement Mortgage, and I'm with
Kenzie Karlstrom. I'm with Sotheby's here in Central Oregon.
All right, so we've been in the market for a while, helping families get into homes, and there's a lot of uncertainty with this market right now, and Kenzie and I get asked the same questions more often than not, so we felt, why not go to our followers, ask them what questions they have, and even experiences that we're having with our personal clients now, and address those questions live with you guys so you guys are in the know with what's going on with the market right now.
Yeah, we've just compiled them all, and let's get going.
Here we go.
So our first one is, how do we know if we're at the bottom? I get this question all the time.
Man. All right, so I guess, my thought on that is I always think back of like when my parents bought real estate and what it is now, right? Mm-hmm. They bought it at some absurd low price. They've held on to it. Real estate is known as a long-term investment, right? So
totally.
When is the best time to get in? I think where most consumers or potential home buyers go wrong is they try to time it the best way that they can. Mm-hmm. And the media tends to portray on when is the best time.
Yeah.
Right? Home values are coming down, rates are down, or whatever that is.
Yeah, I constantly tell people, the best time to buy was 10 years ago, which is not the greatest motivational speech, but it is true because real estate is a long-term investment. Right. So if you buy now, you're thanking yourself in 10 years. Sure. We're not going to see that immediate appreciation in the first 6 months, but you might see it over that 10-year span.
I think about our clients that were buying during the pandemic, right? One of the most abnormal markets than we've ever seen. Interest rates dropped at historical lows. Everyone came into the market.
Yep.
So a buyer in that market was competing with 5, 10. We had a client that was competing against 40 other buyers on one house. And what that translated into is, the rates were low, but now they were paying $10, $20, $50, $200,000 over a premium just to get that house, just to get that low rate. And the buyer said, I hate this market. This is really tough.
Yeah.
Then what did we see last year? We saw interest rates go up dramatically. Then people hated the market because the interest rates are high.
Yes.
Right? So I guess my best advice is, I don't know if you agree with this, is when it financially makes sense for you, you just get it.
I know. Sometimes I think you see all your peers buying and you're like, oh, I should have done it then. Oh, I should have done it during 2020.
Sure.
Oh, my friend said he has an interest rate of 3.1 and you're telling me my interest rate's going to be twice that. I have a perfect example of my own self. I bought a house during a crazy bidding war, 9 offers, 2 cash. I spent $47,000 over asking. Same price point, just bought a house and I paid $35,000 under asking, same price point.
Sure, right.
So, it's really quite interesting to see you overpaying or underpaying. Did I overspend on the last house I bought, but have a better interest rate? Or did I get a better deal now and I'm going to refinance later? Right. So I agree. Timing the market is impossible.
I think in the end, you just get in and you're going to be so happy that you got in down the line if the plan is to hold on to that property a long time.
Totally. Long-term investment, I think, is so true. So I think that's basically answers that question. It's a bit hard to say, are we at the bottom? We don't know.
No. Right. So one of the top questions that I got during this poll was what's going on with interest rates. What I'm seeing right now, kind of halfway through 2023, is we've seen interest rates rise. I don't know, they were in the 2s and 3s and now they're in the mid 7s.
Dramatically.
Right. So if you haven't been educated on this process and you're watching the news or talking to someone who has a low rate already, you're handcuffed by, I'm just going to wait for the interest rates to drop because I feel that's going to be the best time for me to get in.
Right.
Right. So mortgage rates are tied to inflation. So that's why as things got more expensive, interest rates rose dramatically.
Yes.
Think about going to the market or traveling or filling up your car with gas, right? Everything's become more expensive.
Yeah.
That's inflation. We're starting to see inflation come down. Historically, going back into the 70s, every time we've gone into recession, which we're going into recession in some capacity. In every recession dating back to the 70s, interest rates have dropped.
Yes.
So we're going to see that. When is that going to happen? I have no idea. Honestly, I think it's going to be a bumpy road until the end of the year. I don't think we're going to see a big drop or a big increase.
Do you think it's actually tied to the year, or do you think we're going to see it a little bit into, because it's winter, I almost think we're going to see it a little bit into February, into that new year.
What I do know is when you go into an election year, which is next year, historically, we see interest rates come down because the people that are being elected want to show that they're doing something good, so they're going to lower interest rates, right? So I think we'll see that come down, barring no political unrest or world ending. I think that on top of the election year, 2024 should be a pretty good year. I don't think it's going to be a dramatic decrease to rates, but I think we should see some relief in like first or second quarter of 2000.
My stress with this, though, is this pent-up demand. You've got all of these people sitting on the sidelines, and they just continue, more and more people add to that pile and say, I'm going to just wait until interest rates make a bit of a dip. And if we don't see them if we don't see them dramatically dip, but we just see them slightly dip,
sure,
all those people are going to come right back into the marketplace, and it's going to be the most aggressive bidding wars demand we've seen.
Right. So from a buyer right now, if you're educating a buyer on this market right now, I'm curious, like, what do you tell them about the interest rates? And then if they tell you, Kenzie, I just want to wait for rates to drop and then I'm going to get in, like, what does that conversation look like?
Yeah, it's a tricky one, and it's super common right now. So saying, if this is your time to buy right now, it really comes down to what's your financial status? What does it look like? Yes, something is going to be a little bit less affordable because of rates right now, but we do, like you said, we're going to go into an election year, 2024. We'll likely see some dips or some more, affordable interest rates. I think that's just when people have to refinance.
Sure.
So if you want to wait, by all means, sit on the sidelines. But I have people that have been waiting since 2020, thinking that interest rates are going to come back down to that.
Right.
I don't think that we will see interest rates below 3 in our lifetime ever again. But that's just my maybe pessimistic.
I would agree. I hope that happens, but you're probably right. We probably won't see that again.
Right.
I think what most people don't talk about is they're so focused on the interest rate. The thing that people don't talk about is there's such little homes for sale. And you talked about that pent-up demand, right? The millennial buyer pool represents about almost 60% of the buyer pool right now.
Wow.
So if they're all waiting for interest rates to come down, meanwhile, there's not enough homes for sale. When rates do come and that frenzy comes back into the market,
it's going to be chaos.
It'll be chaos. It'll be super competitive. But the big thing is it's going to cause home values to continue to increase.
Yeah.
People just don't talk about that.
And I don't want to scare people and say, this is now, like, look at what could happen, because I truly don't know I don't have a crystal ball. But I do think it's important to educate them on this is what could happen if interest rates even stayed the same.
Right.
And the demands just get so large and the inventory gets so thin that people have to buy something.
Sure.
So, I mean, I try not to scare people, but when it's your time to buy, I'm like, by all means, let's go.
Yeah.
It seems like regardless of where interest rates are, our industry has been very much based off of life. So, I always joke, but it's not that funny, but there's the 5 Ds of real estate, and it's death, divorces, diapers, diamonds, diplomas. That's what our market is based off of.
Yeah.
When something happens, you have a kid, you need to upsize, your kids go to college, you get a diploma, you downsize.
Sure.
I mean, it really comes back to what's your time and less focused on the actual interest rates. Yes, they influence your affordability, but it really comes down to just, is it your time? And I don't want to stress it. If it's not your time to buy, just wait on the sideline.
Right.
You'll thank yourself if you buy now, but
5 Ds, I'm going to start using. Yeah.
it's so good. This is an interesting one about FHA financing. So I understand FHA financing means it's my primary home, but can a parent co-sign on that loan? Can they also live in the home? That's kind of an interesting one.
Okay, that's a good one. So FHA typically is a big benefit to someone that wants to buy a house that doesn't have a big down payment.
Okay.
So you can buy a house with as low as 3.5% down payment, which is awesome. So low down. It's also very favorable for someone that may not have the best credit. So that's usually why someone that will utilize an FHA loan is someone usually that fits those parameters.
Okay.
Now, to answer your question, there's some great benefits to FHA too that a lot of people don't understand. So you could have a parent co-sign with you to help you qualify.
Okay.
So if you go to qualify with me, it's not getting you into the price point that you want. Your parents or a family member can come in and co-sign with you to give that additional income to help you qualify, get into the home.
Even though it's not their primary.
Yeah.
Okay, that's cool.
So we call them a non-occupying co-signer.
Okay.
So we're helping you out. We're not going to live in the house, but basically they're coming in to help you with additional income.
Love it. Okay.
Another really cool thing about FHA, and if I were doing it all over again and I was in my 20s, now I'm old in my 40s, is I would have bought like a duplex or a triplex or a fourplex.
Yeah. With FHA.
With FHA.
Okay,
So the beauty of FHA is you can buy a 2-unit property, a duplex, with as little as 3.5% down payment.
Yeah.
But here's the best part and why I would have done it. You can live in one of the units, and then you get to rent out the other unit.
Yeah.
And that rent that you're getting from that other unit is helping you pay for your mortgage.
Wow. Does it help you approve for the mortgage?
Yes.
Okay.
So we get to use the projected rents for that. So imagine buying your first property, probably not your forever home, which your first home normally never is.
Yep.
You get to live in the unit. You have to live in it for a minimum of 1 year. You can then turn your unit that you were living into a rental property and then go buy another property with 3.5% down,
Wow.
5% down.
Okay.
So think about in your 20s or early 30s, starting to build your real estate portfolio by buying units.
And only 3.5.
And only 3.5% down.
Cool.
Right? I mean, this is talking about retiring early, right?
Yeah.
Not getting in the grind and working till you're 60 is creating that portfolio early. And FHA is an amazing tool.
Now, FHA, you do pay mortgage insurance.
Yes.
Okay. Can I get rid of it?
There's mortgage insurance. You cannot get rid of it on FHA.
Okay.
Yes.
So what do I do after that first year? So let's say I bought my duplex. I'm in my young 20s. I'm like, hey, I want to turn it into an investment property and buy another FHA. What happens to that mortgage insurance?
It stays on there for the life of the loan unless you sell or refinance.
Got it. Okay.
But if it's cash flowing via the rents, who cares?
Who cares? Yeah, no, totally. And you would have run the numbers with the PMI.
Exactly.
Yeah. If you want us to answer any more of your questions, drop them in the comments. Hit the subscribe button. One of the spots.
Do you have more content that they can see you?
Yeah. You can find us on Instagram, TikTok, Facebook, you name it. Google our names.